Analyzing economic policies, impacts on businesses and individuals. Introduction. Analyzing economic policies is crucial for understanding their implications on businesses and individuals. This succinct guide explores methods for dissecting economic policies and assessing their effects. Policy objectives. Identify the goals and objectives of economic policies, such as promoting growth, stability, or equity, to understand their intended outcomes. Economic theory. Apply economic theories and models to analyze policy proposals and predict their potential effects on markets, prices, and behavior. Data analysis. Utilize economic data, including GDP growth, unemployment rates, inflation figures, and industry-specific indicators, to evaluate policy impacts empirically. Cost-benefit analysis. Conduct cost-benefit analyses to weigh the pros and cons of economic policies, considering short-term costs versus long-term benefits. Stakeholder perspectives. Consider the perspectives of various stakeholders, including businesses, consumers, workers, and policymakers, to assess policy implications comprehensively. Regulatory impact assessments. Examine regulatory impact assessments to understand how economic policies may affect businesses' operations, compliance costs, and competitiveness. Macroeconomic effects. Evaluate macroeconomic effects of policies, such as fiscal stimulus, monetary easing, or trade regulations, on aggregate demand, investment, and inflation. Microeconomic impacts. Analyze microeconomic impacts of policies on specific industries, market structures, and individual firms, considering factors like market competition, pricing behavior, and consumer welfare. Distributional effects. Assess distributional effects of policies on income distribution, wealth inequality, and socioeconomic disparities among different demographic groups. Dynamic analysis. Conduct dynamic analysis to account for policy interactions, feedback effects, and unintended consequences over time, recognizing the complexity of economic systems. Conclusion. By employing a multifaceted approach to economic policy analysis, stakeholders can gain insights into the effects of policies on businesses, individuals, and the broader economy. Such analyses inform decision-making, policy formulation, and public discourse, facilitating informed choices and effective policy implementation.